Supply and demand is the best trading strategy in the markets in my opinion, and a lot of people are doing it wrong. So here are 5 secrets about supply and demand that no one has told you. Okay, so number 1, not every supply and demand zone has to hold. A lot of people think that supply and demand zones are heavenly and they must hold, and if they don't, then the strategy is invalid. It's not like that. There will be a lot of zones that you draw that won't hold. And why is that? That's just how the market moves, right? It moves in a state of probability. There's a higher probability that there will be a shift of trend at a zone, but it isn't guaranteed, and many people think that it's guaranteed, which screws them up in the long run, and they end up with a blown up account. Number 2, follow the trend with supply and demand, right? You might think supply and demand zones are meant for going against the trend, but that's not always the case. You should always be going with the trend than against it. The most common saying in trading is the trend is your friend, and I 100% agree with that. Now, how do we go with the trend using supply and demand? Going on higher time frames is key. You'll see the trend immediately just by the higher time frames, and you'll know which way the market wants to move. If there's no trend and we're in a state of chop, you can just play that range using supply and demand, and it works even better in my opinion, right? Now, let's say we're in a downtrend, right? We're making lower lows, lower highs. This is our trend right now, okay? Each low that is created, supply gets formed, supply gets formed. You already know that this is a downtrend, right? So what you would do is go on a smaller time frame and draw your zones. So let's say we zoom in on this little section right here. Inside this area right here, there could be price action that moves like this, right? Another zone here, bam, right? Let's say this is the bigger time frame and this is the smaller time frame, right? In the smaller time frame, you can see that a zone was already created from this huge move down, and then we retested that zone. Right as you saw sellers actually coming in at the supply zone, you could have started a short position, maybe right here, right? Maybe even lower with the stop above these highs. Going with the trend will always be better than going against the trend. Don't fight the trend, play with it and ride that hoe. Number 3, when a zone is broken, it doesn't automatically become the opposite zone. What do I mean by this? Let's say we break a supply zone, right? So price is moving la-di-da-di-da, and we break a supply zone, right? I'm saying that the zone that we just broke out of doesn't always become a demand zone just because we broke out of this supply. This doesn't always have to happen, right? Usually it can do this and then flush down. There will be times when we break a zone and there is no demand on the retest of the zone, like this right here. Now, there are rules from what I have personally experienced with this though, and here are some. When a zone gets broken and retests the same day, it's a good indication that we could bounce from that level or reject, right? Depending on supply and demand. So if we're moving and we break above this level right here the same day, there's a good probability that we could bounce off the level if we do retest it. But if it's a zone that was broken a few days ago and is now retesting, usually those zones don't tend to hold. Keep in mind, this is just from my experience. I could be completely wrong about this, and the instrument that you're trading, this strategy could work more times than it doesn't, right? So test this on the instrument that you're trading and see what works best for your instrument. Every instrument will have different market participants and they'll react differently to supply and demand zones. Keep that in mind. That's a huge sauce that I just gave out for free. Note that down. Every instrument has different market participants, and those market participants will react differently to supply and demand zones. Find out how market participants usually react at supply and demand zones using your instrument. Every instrument will be different. Find out what works best for your instrument, and that's the biggest sauce ever. Trust me. Trust me, daddy. Another one is, let's say we see buyers come in at a zone initially, right? We're coming down, we see buyers already. We already see that buyers are stepping up here, and then a big move comes and pushes us out of demand, right? We will likely have this zone as resistance now. Why is that? Think of how orders are coming in through the market. People will be longing in this demand zone, and inside this zone, there's going to be unfulfilled orders when we move to the upside, right? There's going to be unfulfilled orders, and then once this big move to the downside comes, all these orders right here, they all got filled, right? And every order that got filled right here, once price is below their average, they're red on their position, right? Now, some of them, they're going to be stopping out of this trade immediately right as it breaks demand. And there's going to be some traders that are still holding this position, but they're red on this position. They could be averaging down, or they're waiting to get out of their position, right? So when price moves back up into their average, do you think they're going to hold the position? No, they're exiting their position, which is now acting as resistance on the chart. So sellers will be shorting this retest, and buyers will be exiting out of their long positions that they established over here for break even, right? Which will act as resistance even more, which will likely fuel us more to the downside. Number 4, you don't have to trade every single zone. When people find out about supply and demand, they try to trade every single zone that they draw. I know this because I have done this. Trust me, it's not worth trying to trade every single zone, because you will quickly find out that not every single zone holds, like the first secret I talked about in this video. Trying to trade every single zone will likely have your account blown up, because you might be drawing demand zones right here, right? Draw a demand zone right here, draw a demand zone right here. Don't try to trade every single zone that you draw. You guys can see out of these 3 zones that I just drew, only one of them actually worked. And that wasn't even a good zone. The market is cyclical. There will be times when supply zones are stronger than demand zones, and vice versa. Trading a demand zone in a market where demand zones are getting sliced through like butter isn't something you'd want to be doing. You'd want to be favoring supply zones when supply zones are strong, and demand zones when demand zones are strong, right? With market context, use the zones that have more strength and ride that trend. For example, on ES today, we knew that this was a very strong supply zone, right? So we waited for sellers to come in and we shorted this move down. We knew that even though we're kind of in an uptrend right now, that supply zones have been pretty strong recently. We also know that demand zones have also been very strong. So there will be a market when both of them are very strong and you're able to trade both of them. And there will also be times when supply zones are super strong and demand zones aren't, and vice versa. You gotta trade whichever direction has stronger zones, right? If demand zones are stronger, trade in that direction only, because the probability will be in your favor when you're trading those zones compared to supply zones when they're weak. You don't want to be taking a low probable trade. Yes, it might work out, but if the probability is low, why are you taking it, right? We're here to manage our risk and get into high probable trades that are likely to work out. And if it's not a highly probable trade, why are you getting in? Number 5, use supply and demand zones as profit targets. Supply and demand is a way of knowing when big money will step in the market, and gives you a big sense of direction. If we're, let's say, rejecting a supply zone and are coming down, we are more likely to hit the next demand zone if there's no support levels on the chart. How would we find moves like this? There'll be times when an area of consolidation occurs and a big move happens, right? And during this move, it's very directional. If we zoomed in on the chart, we can see that the move was literally like this. For example, right? There's literally no buyers while price was coming down. Maybe small support right here, but zooming out, there's no buyers throughout this whole move to the downside. Moves like this are a good sign of knowing where buyers and sellers will come into the market once we enter this area, right? Once we enter this huge area of no support, we know that there's likely going to be zero resistance to the upside. And if price does come back into this zone right here, we'll likely not see any resistance all the way until this supply zone that was created. Vice versa for demand. All right, here's a hidden one. I know I said there's only going to be 5, but I just thought of this while making this video. So this is just some sauce for anyone that's this late into this video. Subscribing to this channel. That might be the best secret out of this whole list. I'm giving y'all the sauce right now, so a sub isn't even a bad trade, you feel me? Like the video if you learned something new, and comment down below any questions that you have, and I'll see y'all in the next one. Peace.